Hi, I wanted to do something different with this video. I wanted to talk about some of the trades that I take that are a little bit out of my formal trade plan. I call these trades of opportunity. And these are some of the finer points to trading and price action. And before I start showing you some trades that I've taken this week and comparing the differences, I want to just bring up the idea that when you're learning the strategy, you're not supposed to be an expert at it. In fact, it's going to take you time, and it's not just the strategy itself, but it's the strategy and how it relates to price action, how it relates to you, the individual trader, how it relates to your trade plan, and the ultimate goal of being able to quit with a positive result a majority of the time. I think if you're having problems with that, you could have an interim goal, and that would be to control your drawdown and to limit, minimize, eliminate as best you can losses in general. And from there, work your way to trying to get positive a majority of the time while continuing with that discipline to limit your drawdowns. Taking trades of opportunity is not something that I'm going to recommend right out the gate, but if you pay attention to price action and if you pay attention to what the strategy is telling you, what the price action is telling you, how the exhaustion dots work in relationship to the balance line and the support that we get off of the yellow brick road, the 50 moving average, and then of course whether you decide to use filters or not. And of course you can get really good at deciding when to use the filters, even in officially, if you're not supposed to trade because of a filter, if you interpret the price action correctly, you'll get better at knowing when the filter is not going to be effective. So you have to learn how to read price action. And with these next examples, I'm hoping to at least point out something that I like to look for when I'm trading. And if you start paying attention to the same dynamic, then hopefully this will assist you in maybe passing on trades that aren't really as high of a percentage as perhaps the same setup in a slightly different situation. Price action is always the king. We do our best to interpret price action. The strategy does a really good job. But the better we get as traders to really understand what the price action is telling us, the better we are going to be able to use the strategy. And just by going out of the box, following the rules, following these simple trade plans, you're going to do fine in the end if you stay disciplined and keep your risk small, stick to the spirit of the strategy. But once you improve, once you're able to understand what price action is telling you, maybe 6 months from now or somewhere down the road, you're going to be able to even increase your profitability and your effectiveness as a trader. And your confidence will increase as well. But you have to allow yourself the chance to get to that point. Don't expect it right out the gate. Make it a goal to work towards. So I want to encourage you to read up on price patterns. Learn what you can about the various price patterns. There are some that are very reliable: bullish flags, pennants, bearish flags, pennants, some top and bottom formations. You could even apply a volume chart to get additional confirmation that go with some of these traditional patterns. And then when you get a spotlight trade that lines up with one of those, that's practically guaranteed money. Nothing's 100% guaranteed, but it's getting close. Don't tell anyone. We don't want the government to come in and make it illegal. All right, so one of the things I look for in a trending market are action, reaction, subsequent action that tends to mirror the first action. If the reaction pulls into one of our lines, the balance line, one of our major moving averages, and we get a setup off of that, there's a good chance that that subsequent action is going to be a really good trade. All right, and you can start learning to look for those, and don't be afraid to see in your mind maybe a higher time frame in a bigger action move. Okay, so you might see, like in this case, you've got, for example, an action move, reaction, action move, reaction, action move, reaction, action move, right? And you get the stair-stepping effect which is what most good trends look like. And you'll notice the best trade of all this is the reaction into the 50 moving average. The dots line up on it, meet the criteria, and give the perfect trade that takes advantage of the next action move up. But you could also look at this entire move as one action move on a higher time frame. Okay, so then maybe you got to beware of the reversal, because the reversal might just be a reaction that sets up a bigger action move up on a higher time frame. And so you're never going to know for sure, but you can look for clues. So I missed the first two trades of the NQ this morning on this particular date. Okay, and actually this is a trade I'm going to show you in a few moments. I want to show you another setup that I took earlier in the week first. It almost looks just like this. Then we can compare the two. So let me just find it, and we'll come back to this one in a moment. Okay, so this was actually yesterday on the 10th. Now, I actually missed the first trade of the day because I was calling the trade room and I was trading the Russell, and I just, it's hard to trade the NQ and the Russell at the same time, especially this 8-tick or 2-point momentum bar can move very quickly. And so while I was focusing on the Russell, this first trade of the day right here triggered in and was a beautiful trade, perfect to target 3. The trailer even stayed in for a much bigger move, and that was one and done. Meanwhile, I was trading the Russell, and I was also one and done or two and done. I had a break even and then a winner. So I'm fine with that. That's why sometimes I like to come back and take a trade of opportunity, especially with a chart like this that produces a lot of winning trades, and then knowing what I know when I add a little bit of the additional art and nuance to trading, which is what I'm going to attempt to show you guys so that you can start thinking about this too, because needless to say, price action, when you learn how to read price action, you're just going to be a better trader. So I scrunched this down a little so that we could kind of see this. I came in right around in here, and I was watching the price going up. This is slightly after the trade room, and the nice crossing over the 50 moving average. You had the pullback into support and a little bit of the ramping up. These are always really good trades when it kind of stalls a little bit and it seems like it's going to fail, but then it grabs hold of the support here and springs up off of that 50 moving average, or especially on the downside. Both work very well. And what I was noticing was a good strong action move that you could either say, goes to here or maybe goes to there even, right? Because you had a little bit of a pullback and reaction into support, and then it sprung back up. Not much of an action move from here to here, but on a higher time frame, right? You start imagining the higher time frame from here to here, and maybe even from there to there, right? Like if this was on, I don't know, a 10-minute chart or a 5-minute chart or whatever, or a higher momentum bar, you could see just a smooth move up, and then a nice reaction down. And the reaction should be 1 to 2/3 of the action move, give or take. If it's less than a third and it finds support, it could lead to a real strong move up. And then you had the mini action, mini reaction, second mini action, and all that makes for a nice action move. Another reaction here, and then another action move up, and it's starting to look similar to these, whether it's one of these or the whole thing. Again, I think abstractly, but what I'm noticing is a nice setup, the pullback into support, right? Well, I couldn't get this. It was already too late. So now I'm just waiting for the next setup. And I saw this reversal here, this green trade, and I was very skeptical because it looked to me like you had a nice action move up again, and it looked like it could be another reaction down. So I was not in a hurry to jump on this green trade, even though it's a perfectly valid setup. And if you didn't really understand these things that I'm trying to explain to you now, you might have just decided to take it, and it would not have been a mistake if you're looking to take another trade of opportunity, for example. But what I noticed was a good move. These action-reaction dynamics work on all time frames, and I noticed a nice action move here. I noticed one that mirrored that. Remember, the subsequent action move is always a good trade if you can grab it, but see how close that is? and then another one, another reaction. But then I noticed that the third action move was a lot less than this one before it started coming off. So to me, I'm noticing that momentum to the upside is waning, and we've already had some good moves up, right? So there's a good chance, and that's why the line went green and it got overbought and we got a short trade, by the way. It's one of the reasons. But I already had a successful trade this morning with the Russell, and I wasn't in a hurry to take a trade that's going to lose money on the first trade. So I waited. I wanted to see if this was going to come up and test these highs. And that's exactly what happened. It came up. It didn't stop out. It looked like it was going to right here. Notice it stays red, though. The calculator thinks it's short. It stays red, doesn't stop out. And now I'm thinking, if this pushes down, I'm going to get short right below that little spike right there. And to me, that would be a trade that has a good chance of succeeding. My fear is that we were in a strong trend and it could continue higher. There's no way to really know for sure. The moving average is spreading away. The 200's inclining nicely. There's some momentum behind this move here. The other thing I noticed is that when I decided to jump on this trade, and I did, it came down, went up and tested even again, and then it started rolling down, and I was in this trade. I got short right here. And I was thinking, and you know what? I don't even remember if I either got here, got short here, or got short here, because I don't like to make big adjustments. I'll have to check my records, but I either got short here or here. Either way, I was pretty confident after it failed to get higher that a nice move down was imminent, especially with the pink up and the green up. If that wasn't a green trade, it would have been a pink trade, and it seemed like the perfect kind of trade, the kind of trade I like. And my goal was if I could at least just get to break even, I'll feel good. And that's right where the moving average has gotten up to. I should be able to get there, right? So look what happens. Instead, it doesn't quite get to money management. It misses, and it starts going higher. And then I get the bounce off of the 50 moving average. Okay, now I can't ignore that. I want to protect the trade I'm in, but realize that even though this looks like a trade that should be able to go down far enough at least to get me safe, that doesn't mean it's going to, right? It's just about probabilities. I will still take this type of situation whenever it happens, but in this case it didn't work because look, I have to stop and reverse right here. And with the NQ, I don't stop and reverse with a 2-tick adjustment. I always make a 4-tick adjustment. It's a quarter point tick. It's really hard to know the best way to handle these because the quarter point tick, But I ended up getting long at 56.86, right? I was willing to give up the $4, the 4 ticks that is. I got long, and this original trade was a partial loss. I lost like 2/3 of my risk. Still not the full thing, which is good. But now I'm starting to think that this is looking like an action move here on a higher time frame, right? With the reaction ending right on my moving average. Finding support on the moving average. It's about 1 to 2/3, probably about 1/3. You could even probably retrace a Fibonacci retracement. It's probably right here. And so the move higher now, I'm starting to feel really good about it, right? I was feeling good about the short. Okay, you throw the line in the water and sometimes the fish get away, but I'm casting another hook right here and I'm getting long. And sure enough, like clockwork, it breaks out to new highs for the day, pushes through target 2, target 3. I only had 2 positions on. I was just trading to target 2 and target 3. And while I lost 3 points each, so 6 points total on the short, I picked up 6 points here and 8 points there. And the end result was a very successful 34 ticks of profit, basically, is what I ended up with. Because it came up and ultimately stopped out right there. And you know what? I'm very happy with that. 2 trades. That's my power of quitting. I was done for the session. So the reason why I wanted to show you this one first, because I want to show you what happened then today, which was a very similar situation. And be mindful of the fact that I'm just sharing with you my own thoughts, right? When I'm looking at this chart coming into this trade, I'm thinking, is there a high probability trade for me? Or is it just a regular old run-of-the-mill trade, right? Which is still a high probability trade, but I want a higher probability trade. So, this to me seemed like it could work, it could not work. I mean, there's no way to know. But when I started stacking up additional confirmation, like a failure to make a new high, and then rolling over and coming down to the entry again, I was feeling really good about that. And I was wrong, but I could have been right. I don't feel like I was wrong taking the trade. It's just that it didn't work this time. Remember, there's no absolutes in trading, and you can't form an opinion about something just because it loses. I would take this again. And so just to put my money where my mouth is, let me show you what happened today. So this is today's action. It's roughly the same time, and it's roughly a similar situation. You got the trend going up, and you could even go further back and see that the trend even starts down a little lower. And this is a bunch of bottoming. There's some good trades in here, actually. But just to show you, this is all early in the morning. I was trading the Russell again. The first trade of the day would have been this one, short. And I missed it. I was in my Russell trade. Put that one on Facebook. This would have been a partial winner. See? Then it gets long here. And that one looks like it's going to fail, but the stop holds, and it ends up pushing higher, and it doesn't quite get to target 2. It gets close, and it's another partial winner. So 2 partial winners, and that would have been power of quitting, right? This short one here, this one here. But I missed it. So this started a trend up, and it went for a while. It was a much slower session, but you could see a similarity to what this looks like versus the one I just showed you, right? An action move, a reaction into the 50 moving average. Not long after it crossed over, bouncing off that 50 average. That's the best trade. If you could find those, always take them. They don't always win, but they usually win. That's a good thing, right? High percentage. So action, reaction, action, up. There's that green trade again. But what I did this time, which was a mistake now that I look back in hindsight, knowing what I know and seeing the exact same pattern as yesterday, I just jumped on that trade as soon as it showed up. I didn't wait for it to come up, test the top, and then roll over and then take it like I did yesterday. And I consider that a mistake because this is still a young trend. And so, the one thing I was thinking is that my odds were probably a little better on this because I had a reversal here, even though this one failed. This one didn't trigger in. This is the third reversing trade in a row, and the odds start going up. Usually, though, they go way up after 3. So I should have waited. I really should have. And instead, I got short, and it tested and then popped through and stopped me out. And I had a losing trade. There it is. But instead of going higher like we saw yesterday, I didn't have a stop and reverse. What I would have done if I would have waited is when it came up and made that new high, and that was a new high of the day, and it barely got through, this next short has got money written all over it. It failed to get higher, like a false breakout usually means a nice move in the opposite direction. Had I waited to see if it failed, I would have saved this losing trade, and instead I would have been in this one. I did take this one also, and that was a nice winning trade. You see, it came down, and it just missed target 3 by 1 tick. So I got out at target 2. I traded for profit at target 3, and basically my experience of these 2 trades was about a wash, basically winning and losing the same amount. I think I might have left a couple ticks on the table and, taken a small little loss on that. And then I had to go to a dentist appointment, so I didn't keep trading. But notice the difference. Notice how similar these 2 trades are, these 2 sessions. The first one I showed you, I waited for it to test up here. And then when it came down, I grabbed it. And it still lost. But it bounced off the 50 EMA and went up for a full winner. This one fake breakout. I didn't wait. I should have. If I did, I would have been on that pink trade, and that would have been, of course, one and done for a winner. Do you kind of see what's going on here with these setups? You see how there's a strong move higher. I'm looking for the move, the next action move to be waning, to be less. Like you could see this is a nice move from here to here. Nice reaction into the balance line. Nice move from here to here. Reaction into the balance line even closes below it. That's the first indication right in here. You know, you even have a setup to short and everything, but no real test, no real end to the trend. And then it comes up and tests the highs and pokes through and fails and starts coming off, and you could see that it's starting to roll. Yeah, could it consolidate and still go higher? Of course it could. Anything could happen. Price action is in charge, not us. But what are the odds here? This action move, not much of an action behind it. Right? It barely got to a new swing high and failed. The next move down could be an action move in the other direction. And that's exactly what that was. Tale of two sessions, two trading sequences that look very similar with similar thought processes. One I failed to wait. One reason I did was because I had to rush off to a dentist appointment, and that's my fault also. That's a mistake. My personal needs should never go in front of the needs of my trading. I don't care what it is. That never seems to work. You always put your trading needs first. All right, I hope you enjoyed this video. And by the way, this is the NQ8 tick, and there's two more comments I want to make on this before I shut this video down. There's been some questions in the Facebook group about, you know, what's a good chart to trade with the NQ, and you have a lot of good choices. This one here is not for the faint of heart, although at this time of day it was quite orderly. Yesterday as well, I didn't tell you, yesterday those two trades took about an hour, right? In other sessions, we've seen those two trades like that take about 30 seconds. So it could be really frantic. When the NQ is really hopping and popping and moving fast, and you try to place these bracket order trades with two different targets, by the time you place your trade, move your stop, move your targets, the trade's over. And it may even be at full target in the opposite direction. You don't have time. And if you're going to trade a market that fast, there's two things you should do. Practice, just marketing in and marketing out, going to one target. Don't be complicated, because you might have to stop and reverse and hit that reverse button. You're going to pay some slippage, but the markets move so well and the trades win so much, you should be able to get to positive pretty easily if you practice it. The other thing you can do is just slow it down. Instead of an 8 tick, or like in this case a 2 points, the same thing, range bar, momentum bar, try a 10 tick, try a 12 tick. If it's moving really fast and you got really good range, just slow it down, choose a different range bar. And the other thing you can do is go to a tick chart. And there's been some good posts from members who are having success with a 233 tick. Some of you might like the 610 tick. It's a lot slower. You got to be really patient. Me, I want to get in, get out, get done, and be finished. That's just how I like to trade. But I've also been doing this for a long time, and I've worked on this strategy more than anyone else, right? I mean, I've been trading it for over a year now before it even became what it is today. So no one's going to know it as well as I do, at least right out the gate. You will know it as well as me, and maybe even better than me, if you just stay patient and start applying common sense. And don't forget to read the price action. Once you've learned the setups and you've got a good grip on your trade plan, you've practiced it, you've gone through the steps of success guide, and you're really building your foundation properly, which, by the way, that's not for me. That's for you. The trade plans work. But if you don't do the work for yourself, you'll never believe it. And if you don't believe it, you're going to quit. This is a goose that lays golden eggs. You guys hear me say this all the time. Don't kill the goose just because it gets indigestion once in a while. But if you don't do the work, you're not going to know that. You're just going to think the goose is sick and no good. That's a big mistake. So do the work yourself. It's for your own good, and prove that you've got the trade plan that's best for you. And if you follow the steps of success guide, By the time you finish and you start trading live money, you're going to be in a position for ongoing success. And after all, this is a business that we're running. Take the time to set your business up correctly for ongoing long-term success. And pay attention to price action. You'll learn a lot. This is TJ. I'll see you on the next video.